Good afternoon. Today is October 25th, Tuesday, and I just got back from Malaysia and last night very late, so that accounts for my late recording of this session today. And let's get on with what happened overnight on Wall Street. Overnight, we have seen the basically all the major index for equities has basically rebounded and closed near the high of the day, and it is the second consecutive week. No, not the second consecutive day, trading day from last Friday's closing. We can see that the very strong closing last Friday has spilled over into the beginning of this week, and that result in yesterday the Dow Jones Industrial Average managed to crawl back above 31,000, and that's a very good sign because it shows that the market is right now, the sentiment is actually quite positive. There's a very good chance it will challenge last month high at 32,504, and if the market can close above this level at the end of the month, that will mean that the market is likely to go even higher at least for the first week of November, just before the midterm election on November the 7th. Okay, but what happened after November the 7th could be a different thing altogether, because the market right now is having these positive vibes and thinking that they have already priced in a 75 basis point for the Federal Reserve come November the 2nd. And once that is priced in, the market expectation is that going into December, maybe the rate of increase may slow down. So that accounts for the positive sentiments on Wall Street, and that caused market to go up. So if this is the sentiment, like I said, regardless of the outcome of the November 7th election, it's very likely that we're going to see a hung election because right now the polls are saying Republicans is likely to maybe secure at least one chamber of the Congress, and it will be a stalemate. And if that's the case, and if the Democrats actually lose both chamber of Congress, the remaining terms of Biden's will definitely be a lame duck presidency. So going forward, I think the condition for a hung election is actually very high, and what it means is that both parties, nobody is going to be satisfied with the result, and they may incite the supporters to come out into the street. And I think there's a very high probability that because of the fact that no party will accept the result or be happy with the result, it will end up in animosity between. It's going to be it's going to be very divisive, and it's going to be very difficult, okay, for Americans. So the odds of more unrest as a result of this midterm election is not going to resolve how America is going to go forward as far as politically is concerned. So that will be a different thing altogether. We have to account for that, the possibility of a hung election right after the November 7th election. So the beginning, this positive sentiment that we are seeing currently may last into the first week of November, but that's about it. Okay, thereafter, after the midterm election, like I believe, we are likely to see a lot of polarization in the US electorate, and that is not a good thing. It's definitely going to be a negative. It's going to be a drag on equity prices. So with this in mind, at least in the meantime, we still have one more week to go before the month end. We will see that how this market can surmount the 32,504 levels, which is the September high in the cash index. So do watch out for this. Okay. In the meantime, we can see that the S&P 500 is basically mimicking what is happening in the Dow, because all this capital flow going into the States is likely to have ended up in US blue chips. Okay, that's the reason why we saw the Dow Jones has been relatively firm and was the last index to actually break the September low before we saw that major reversal that we saw last week and extended into this week itself. So S&P 500 right now is not a driver. Then the driver is going to be the Dow Jones, and do keep your focus on Dow Jones. S&P 500 is basically tagging along for the ride. And again, it has marginally taken out the October 13 or 14, no, October the 6th. October the 6th high is at 3,807. Okay, so yesterday we have a marginal high at 3,810. Okay, marginally stay above, and that give rise to the possibility the market may extend higher to 3,900 levels, which is another key level you have to surmount before it can challenge the September high of 4,119.3. Okay, so again, the market is in the Dow Jones, not so much in the S&P 500. Now, among the three major equity index, Nasdaq 100 is the least positive. Okay, it's the least bullish because the Dow Jones, I believe, went up yesterday, up about 1.35%. I think the S&P 500 is up 1.1%, and the Nasdaq 100 is only up 0.85. So it is the least bullish of the three major equity index. That means to say the money is not necessary in this current rebound in the Nasdaq 100. You can see it can't even take out the October 6 high. Okay, unlike the S&P 500 has already marginally breached that level, we are still seeing that the Nasdaq 100 is trading below the October 6 high at 11,660. Of course, this is going to be a very far-fetched level in which for it to challenge based on the current relative weakness in the Nasdaq 100. So again, if you have to buy the Nasdaq, buy the Dow Jones Industrial Average. Okay. Over in Hong Kong, we can see the market is remains very weak. This morning we have a new yearly low at 14,947.4, which is the new record for this year, and sentiment is pretty poor even after the 20th CCP Congress party is over. You can see that the sentiment remains pretty weak. Okay, so there is no sentiment. It's pretty poor sentiment. I must say. Over in the Shanghai Composite, yes, we have a low at just below 3,000 to a low of 2,944.26 this morning, and then there was a rebound, but it looks like the rebound, it looks to be unsustainable. Maybe over the next few days we can see the market coming back down again. The market doesn't like the fact that all the power has been concentrated in the Xi's camp, in the Xi Jinping camp, because now there is no alternate voice in this inner circle. Okay, inner circle means he's the people that he's going to consult. Okay, so if there's no dissenting voice, market don't like the idea that what Xi says and thinks is going to be what they're going to do. And I have a different take on the whole thing. I believe at the current moment, based on the unrelenting provocation by the United States and the West, I think what President Xi is trying to do is to consolidate power so that it gives him a shorter response time. Okay, imagine if you have to consult everybody before you come to an action, that would necessarily impact the response time. I think he's trying to consolidate all his power so that when he decided he need to do something in response to the provocation that we are seeing over the last few years, especially over the recent months. Okay, I think it will give him that ability to have a very short and very prompt response. So I think that will be needed. I think presidency is getting the country on a war footing, in my opinion. Okay, I think it's very logical. Okay, so now that aside, now over in the Nikkei 225, you see that the market cannot took out the 27,400 levels, which was at October 6 high. So again, very similar to the Hong Kong and the mainland Chinese stocks. Okay, we can see that the October 6 high remains a barrier that for some reason they can't cross, especially even for the Japanese equity markets. So the market right now is in consolidation, but over time, I believe this level will be taken up. Okay, because I think the momentum is behind them, and a challenge of 28,000 is, I think, quite likely to happen over the next few days or within the week itself. Okay, let's see. Over in currencies, we can see that the dollar yen from near 152, the market sold off to 145.5. Very sharp move. So the market now basically is having rebound back to 149.70. Now is in consolidation. So what I think happens is this: those who have been chasing the dollar all the way higher to near 152 now got caught in this massive drawdown here. So I think those weak hands have been shaken off because they have been chasing ever higher prices. So when the market turn around so as sharp as we have seen, these long positions are no longer tenable. They basically will have to cut loss. And if that's the case, I don't think anybody would dare to come in to buy again at the current level of just under 149. So maybe the market is going to drift. Okay, and if it drift, I think there's a possibility that it will drift before it eventually go back up again, because the dollar strength remains unchanged. Okay, just because the dollar is under attack, as we can see in dollar yen, that gives rise to the notion that the dollar may be in a period of consolidation or maybe in a corrective pullback, and that allow the other major currencies to actually have a chance to rebound. And if this is the case, I think the another extended rebound may still be in the card for all the other major currencies, including the pound. If this is the case, I think sterling have a possibility of rebounding back to 1.15 half levels. Okay, so this is a bracket of prices between 1.15 half to 1.17. I think the possibility remains very probable. Okay, so do watch out for this move. Okay, I am not going to go long on sterling. I'm looking for levels to go short actually. Okay, over in the dollar versus euro versus the euro dollar, because we are seeing the same thing. Okay, extended retracement higher in correction of a very serious downtrend. The market may see back parity levels, which is $1. So this is not that far away. Currently the market is just under 99 cents. Okay, 98.77 cents to be exact. So for it to extend maybe 130 pips more higher, I think it is very possible. So again, I'm not looking to buy this. I'm actually looking for levels to see if I can reposition my short. Okay, Aussie, we say that the market actually has finished a three-wave rebound. Whether it have enough strength to continue higher, we will have to see. Market topside, if it ever go up, it will be 65 cents. Okay, earlier on I forgot to mention that ever since the last UK Prime Minister resigned, Liz Truss has resigned, and the candidates to replace her has, I think, been crystallized. Boris Johnson has withdrawn his efforts to regain the premiership, and I think the candidate that was vying for the premiership with Liz Truss now will be the favorite. In fact, I think sometime today, in the next few hours, we probably will be hearing the confirmation of Rishi Sunak being to be the new Prime Minister of the United Kingdom, and he will be the first Asian Prime Minister, or how should I say it, non-white, non-white UK Prime Minister ever. Okay, so the market seems to like this choice, and sterling has been basically been bought up based on the slightly positive sentiment. Of course, there will still be dissenting voices. Okay. Now, over in the oil market, we can say the market is basically right now in consolidation after hitting a low of $81.30 and then rebound back to $87.14. The market right now is in a state of consolidation. Upside potential, I think it still remains. I think there's a possibility market go up to $88.50 to $90. This bunch of prices, I think, looks very probable. And then if you look back to the left, you can see that $89.73 was actually traded at mid-month, okay, mid-October. So the possibility market extend higher is actually very high. Okay, over in the gold market, in the cash spot gold market, we can see that gold market has also in consolidation after hitting a low of 1,616.80 cents to $1,670.75. The market right now has pulled back 50%. So the 50% mark right now is basically holding the market. Gold will have a hard time rallying higher unless the technical pullback that we see in the dollar continues for the next few days. If not, it's going to be very difficult for gold prices to extend higher. But that being said, I think the sentiment is good for another extended rally. Okay, if this is the case, I think there is a possibility it may go back to $1,730. Okay, so watch out for this $50 move. Over in the silver, you can see silver rebound has been a lot more robust. From a low of $18.09, the market rallied up to $19.69, and now it's in consolidation. The pullback is less than 50%, and maybe it will continue to drift lower. But anywhere near the $19 level, I think that will be a good level to actually pick up a buy position for a bare minimum challenge of $19.75 to all the way to $20. So this bracket of prices looks to be a very high probable trade. Okay. Now, over in the cryptocurrency, the market has actually also in consolidation. The overnight strength in the US equity did not spill over to take the crypto higher. Okay, so that's a disappointment, but at least it is not falling. So that could be seen as a good thing. So basically, I think the market hit a low of $18,666, rebound back to 19,689. So I think there is a possibility the market may extend higher, and if it does, 20,000 will be definitely in the cut. maybe even higher. $20,400 is actually my bare minimum target here. Okay, so do watch out for this move. I think there is always the probability, especially if US equities actually stabilize and actually continue to surge higher. Okay, over Ethereum, I think this is the best coin so far to go buy, to go long, because it has been very, very stable. It is already taken up a new high for the month at $1,370.90. So for this to extend higher, I think it is among all the coins the most probable, the first coin to actually extend higher. My target is $1,440. Okay, so this is the bare minimum target. Okay, over in the Ripple, for example, the third largest coin, you can see the market is also in consolidation. Market actually have this possibility of extending higher to 95 cents to all the way to 50 cents. Okay, so basically this price range is actually very attainable. Okay, assuming the low at $44 and no, 44 cents actually holds. Okay, over at the other coins, we can see Cardano is also holding off pretty well. And if we see another slight pullback to, let's say, 35 cents, that would be a great level for the market to extend higher. We will have to see where the low actually ends. So right now we cannot project higher because I need to see where this leg actually ends up. If it ends up at 35 cents, that will be great, because if it's 35 cents, then that will mean that there is a possibility for the market to go up to 38 cents, maybe even 39 cents. Okay, so we will have to watch this move very, very carefully. In Solana, we can see the prices is also pulling back in a three wave. I think the low may be already in place, because if you take an equality move, I think there's a very good chance it may has actually hit the equality of $28. Okay, so from here, if the market can actually extend higher, maybe this is what will happen going forward in the short term. A move back to $30 is definitely not impossible. Okay, maybe as high as $31. So this is where I think the market is likely to go. Okay, $30.74 cents to $31.50 level. Over in the Polygon, we have a massive run up. Okay, the market seems to be consolidating after the massive run up, so it looks good for another extended run to maybe 94 cents, okay, to all the way to 98 cents. So this extended rally is slightly to extend higher. Okay, over in Binance Coin, we also see market achieving $277.30. Now it's taking a pause, and at this current at a price yesterday, we can see that market is at a new high for, if you can compare the low traded at $256.70, this is about the highest. And if this is a three-wave rally, the potential for $283.50 is very, very likely. So we can likely see extended price moving forward, maybe towards the $283.50 and perhaps all the way to $289. Okay. Sandbox remains also consolidative. Okay, over the larger picture, we can see a challenge of 81 cents remains within the possibility, but first it had to surmount 80 cents first. Okay, so right now, if you can see this internal structure, I think there is a possibility of a run up to 80 cents. Okay, so this remains very probable. Okay, Atom, which is Cosmos, also have a slightly positive vibe to it. If this extend higher, I think to $12.80 is also very probable. Okay, Avalanche also have a run up to $16.46. Now the market pulls back to $43. If this extend higher, I think bare minimum, it has already hit its minimum target. Honestly, if I look at this as a three wave, it has already hit its target of $16.44. It went up to 46.5. So if this is the pullback, we will have to see if it can do more. But basically, I think he has hit his target. So maybe the money is not in Avalanche. Okay, we have to look at something else. This is Ethereum Classic. Looks like it is positive, and a challenge of at the bare minimum $25 remains probable. Okay, so this one also have a very positive outlook to it. So there you have it. Most of the crypto space appears to be consolidating and bracing itself for another run up. Okay, I shall end my presentation here, and I'll see you guys tomorrow, and see you. Bye bye.